Energy is the worst performing sector in today's sell-off. For more, let's bring in Bill Baruch, president of Blue Line Futures. Bill, thanks for joining us. I guess looking at the oil price itself, global growth fears are outweighing geopolitical concerns.
Well, another bad manufacturing data, a bearish EIA inventory report today, and we're at 2-month lows. But this wasn't just happening right now. And you mentioned the geopolitics. Everybody's yelling, but the geopolitics. But, you know, OPEC Secretary General today, I think, said it best, that Saudi Arabia proved to be a reliable source of oil. And when you look back at it, they were able to meet the demands of their clients, and then they got back online pretty quick. So all in all, during the seasonally bearish time of year, that actually became a bearish tailwind that they were able to meet it. They were able to fight through those geopolitics. So right now, oil looks pretty heavy, and I think there's lower to go.
In terms of if you were going to be investing somewhere in the energy sector right now, do you go more defensive and take on something like an Exxon or a Chevron that's more diversified?
I wouldn't touch those right now. In fact, I think they're fairly bearish.
Okay.
I've been bearish those names right now. I'm looking lower in the chart. For crude oil, yeah, there is some support down here at 52, but there's a trend line down at 47, and that goes back to 2016. Looking at Exxon and more particularly, there's some earning forecasts being downgraded right now, and you know right now too, this chart looks really heavy, trying to push down through $67. We could see Exxon go down to $60. Chevron's really on my radar because Exxon is already sold off. If you look at Chevron right now, it's more the top end of its range. It just failed at 125, and then you have the 50-day moving average crossing below the 200-day moving average. This death cross could bring a tailwind lower, and then I'm looking at a trend line from 2015 in Chevron, comes in about 108. So if you get the tailwind lower from the death cross and we break below 108, we could see this go to 100 or down to 95 in Chevron. I'm bearish energy sector for the next 2 months, but guess what? If we go lower, this would be some value to buy. So I like it to go lower, and then you'll be able to see it for some value long term.
Josh, look out below with crude prices.
I mean, Howard Marks likes to say there's nothing intelligent to be said about the future of oil prices, and I think I agree with that. So I have no edge on where oil prices are going. Speaking strictly about the stocks, this is a tough one for long-term investors. Valuations are good, but the prospect for earnings does not look good. And then if you're a very long-term investor, there's an open question about whether or not oil and gas are the fuel of your children's generation. So you don't get bailed out on the long-termism either. There's a reason Warren Buffett is not scooping these energy and oil and fracking giants up, and I think that might have something to do with it. So I don't love them short-term, and I don't love them long-term. So that's where I am.
Bill Baruch, thanks very much for joining us. Meantime.